more on Tesla's earnings, let's bring in Craig Irwin. He is senior research analyst at ROTH Capital. He has a sell rating and a brand new price target on the stock of $350. Craig, good morning. Good to see you.
Good morning.
So 4 months ago, at the start of the quarter that was just reported for Tesla, the stock was at $240. We're going to open today at $640. Seems to me you can say they had a good quarter, better than expected, good guidance, and still say, exactly. Why are we trading at $640?
And they came in close to the bottom of the range for the guide for 2019, right? So what we have is fervent enthusiasm for the stock and the fear of missing out. That's really what's driving it.
But is it retail investors that are driving this, or is it the institutions? We went into the break with this comment from Elon Musk, who effectively said, hey, the retail investor is smarter than the institutional investor right now.
So right now, some of the very large hedge funds are playing this as a momentum play. They're obviously using their knowledge of mechanics and their ability to get a little bit of an edge there to trade it for momentum. So they're watching very carefully. So just to add to what Phil said, I think one of the key things that made the stock behave really well after market was the pull forward of the Model Y. The Model Y was originally expected to be in production at the end of 2020. Then last year they started talking about it summertime. Now we have production in January. So, that provides pretty good visibility for higher units this year. That's why we cranked our target. That's why we cranked our estimates.
Can you speak to one thing, and I don't know if you saw this, and there was a lot of action on Twitter among the shorts that just hate this company, as you know so well, who say, look, they put out this headline number where they say they're profitable. They say they're not really profitable on a GAAP basis. And yet, I think later on the call, they say they're now self-funding. Are they self-funding? Self-funding would mean that you are profitable not just on an adjusted basis, but on a GAAP basis, because you need enough money
to fund your own growth.
To fund your own growth. So when they say they're so there's three things going on. They say we're profitable on the headline number says we're profitable, even though the GAAP number says they're not, and then they say they're self-funding.
Yeah. So I think self-funding is probably maybe a little bit of a stretch. There probably will be some ability to issue debt around the European facility, and obviously they just took debt on the Shanghai facility. You could see that easily reflected with, a valuation half of where we are now. So that's not necessarily what I think is driving the stock. I think that, the fact there was an analyst that was peppering Musk about, raising capital. I mean, his logic was a little bit flawed. I don't think they have to raise equity anytime soon.
Yeah. The analyst logic was flawed, you think?
Yeah, I mean, why would you want to dilute?
Right.
To me, it didn't make complete sense.
Why
they
a
seem to have the
50% run?
confidence.
Why a 50% run? What's happening? Is that the shorts getting washed out? Is it somebody else stepping in? Is it a brand new look at what's happened? How do you make sense of it?
So first off, it was China, right? So last summer, we upgraded the stock for China, sadly downgraded later. Yeah. But there's some really, really bullish sentiment out there as far as the China facility. People know that, the key marquee European brands make all their money in China. And the volume of luxury vehicle sales in China is fantastic. There are more millionaires on a dollar basis in China than there are in the U.S. So the market could actually end up being really fantastic. But the reality is, the EV market in China is a very, very different character than what we have in the U.S. We have, they're valid cars for that market, but people are taking pieces of that, extrapolating America to China, and I don't think that really works. So that was the first part of the big run. Then from there, there's just been a lot of pile-on. And, you look at their list of their portfolio of projects right now. They got the new Roadster, they got Shanghai, they got the truck, the semi, Model Y. What am I missing? They have a tremendous portfolio. And, people are getting excited about, multiple things or everything in that portfolio to be running it up here.
Hey, Becky?
Hey, Phil,
if I could interject here, I'll tell you one reason why I think the stock keeps moving higher. It's what Craig talked about, this fear of missing out. If you believe that we are at an inflection point in terms of electric vehicles taking off, who would you play right now? Aside from Tesla, who would you play? And spare me the talk about the competition is coming, because it's not there. It just is not there. It may be there at some point, but Tesla right now dominates this market. It has become Kleenex to the electric vehicle market. Right. And if you believe that we are at an inflection point, you want to be in Tesla. That's a big reason why so many people have moved into this stock right now.
That's a good point, Phil. But what it also could mean is that there's all the enthusiasm for the entire industry is running through one stock. Kind of like all the enthusiasm
right about
for
that.
plant-based meat is going through Beyond Meat, even though it's one small company.
You're 100% right about that.
So there are other ways to play the EV market right now. A lot of them tend to be small cap, but Cree is a very good mid cap to play electric vehicles. Cree is the material supplier to everybody making silicon carbide MOSFETs. Yeah. Silicon carbide MOSFETs allow you to use a smaller battery, have a better range, more efficient vehicle. Tesla's their primary customer in EVs now, but everybody's going to be using silicon carbide MOSFETs. Either they're going to be using material from Cree or one of the secondary competitors, or they could use MOSFETs directly from Cree. And Cree is a perfectly valid way to play EVs, and a company that's executing pretty well at this point.